everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about the MACD indicator. Now, the MACD indicator is another one of those oscillating type of indicators, but generally the way that I look at it is it's a little bit of a slower indicator. Some of the other ones that we talked about have been something like the stochastic indicator, which tends to be a momentum, a little bit of a quicker type of indicator. Then we have the MACD, which is the better of the slower world. Now, MACD, that stands for Moving Average Convergence Divergence, MACD. It's a trend-following momentum indicator, and really all it's doing is it's showing the relationship between two moving averages of price. The MACD is calculated, and these are the default settings, by subtracting the 26-day exponential moving average from the 12-day exponential moving average. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD, functioning as a trigger for a buy and sell signals. That's one way to trade the MACD, and probably one of the more common ones is trading the crossovers. So what do we mean by crossovers? Well, when we look, again, like we just talked about, the 26 and 9 period, as you can see with the settings up on the top there, when those cross, that's kind of the area of interest. Now, when we're looking at them, if we zoom in a little bit here, we can see that the 1226, that's that bluish line right here, kind of a greenish line, whatever you want to call it. Then you've got the 9-period exponential moving average in dark blue. So when you have a cross here, that's a sell signal. When you have a buy cross up, that's a buy signal, etc. Generally speaking, that's not really my preference. I prefer it as more of a directional bias indicator. Now, again, as with any of these oscillating indicators, you can utilize it similarly to the stochastics, where you can use it for divergences and hidden divergences, like we have up here on Apple. We have a high and a higher high. Here we have a high and a lower high. That is a type of divergence that is technically fitting inside of there. The MACD is giving you an idea, but that's not really the purpose of the MACD. Again, it's more of a trend-following device. Now, the default settings are 12, 26, 9. You can adjust that to be a little bit slower, and that's usually my preference. When I'm looking at these, I like slowing them a lot farther down to give you more of a directional bias. But generally speaking, when I'm looking at the MACD, when I have price above the 0 line, and that's where the histogram plots down here, when I have price above the 0 line, that's generally seen as bullish. And even better yet, when we have the faster period above the slower period, then we're looking at a good trend indication that we are continuing up. So if you're buying a pullback and the MACD is still pointed to the upside and they haven't crossed down and we're still above 0, then that might just be a nice little pullback to buy into. So here's a great example. We have a rally to the upside. It pulls back, but if we look at the MACD at the time, notice it is still firmly above 0. The faster line is up above the slower line, and everything is pointing directionally up. And that is showing that buyers will likely be buying into this pullback at this point in time to try to push the market higher. Now, as with any other indicator, generally speaking, what you're looking to do is not just use one thing. Using the MACD along with a stochastic on top of a major level of support from a daily chart, that's more along the lines of what we're looking for. So Apple is ripping higher, and this is off of a level of support. This is an entry point off of the daily chart, where we have a one-candle pullback into continuation to the upside, looking for those highs to be retested. Well, that trigger for the longs is above 207.88. So when we start breaking above 207.88, we're showing bullish momentum, we're showing good bullishness to the upside, we're getting a pullback back to that support level at 207.88, and the MACD isn't even flinching. Now you have a potential reason to buy in, and maybe you combine it with a candlestick. Look for a good strong bull bar or a really weak bear bar, and look for a breakout move from there. But that's more the way that I'm looking at the MACD. Now, for me, my personal settings, the ones that I like the most, are a little bit slower, right? I like bumping this to a little bit of a slower move, so my preference is 21.55, and if we go over to the exponential moving average side of things, I like putting that on around 9 or 8 is honestly okay. This one doesn't have to change that much, but the part that I like is slowing this down a little bit. Now, if you've watched any of the videos before that I've done, you know that I'm a big fan of fib numbers. So 21.55, those are simply Fibonacci ratios, and loading those into the MACD with a slower capability gives you a little bit more of a bias in a direction. So again, now that it's a little bit slower, we're looking for what? We're looking for a continuation move to the upside. We want a small little pullback and a strong upward move, and I do not want to see the MACD flinch. Now we're starting to talk with a little bit of a slower to react MACD, giving us confirmation that this is probably just a pullback. And again, combining that with other areas of interest, it definitely helps. So that's going to do it for the MACD. Overall, it's a pretty straightforward indicator. There's not a whole lot to it. There aren't any fancy, fancy algorithms or anything like that built into it. It's simply just the 26-day subtracting from the 12-day. That's really all it is. Now, in the way that we have the settings here, it's a little bit different. It's the 55 subtracting from the 21, still using a 9 EMA. All the same, though. More of a directional type of indicator, giving you a clue that, hey, we might be getting a buy signal when they cross, when we have those crosses in the MACD. But along with that, we might also be able to look for pullbacks within a strong move, noting that the MACD hasn't flinched. So hopefully you found that useful. Hopefully you found it something that you can maybe add to your tool belt. If you're already a MACD user, maybe you found out something new. As always, underneath the video, click on subscribe. Click on the little notification bell icon to the right so you don't miss any of the videos. We put out a lot of videos, and you don't want to miss anything important. Along with that, if you have any questions, feel free to send me an email, jbrink@slingshotfutures.com. I hope you had an awesome trading day today, and as always, we'll see you in the next video. Enjoy, have a good one, and we'll talk to y'all later.